years. And trading is something that I really find very interesting, and I do as a long-term investment. And I find the strategy is very interesting. So I'm trying to explore other areas too apart from equity. And I take this as a great opportunity to learn and also share that with my other fellow colleagues, because it is my common observation that many a times as ladies, we don't understand financial planning very well, and we rely on our male companions to do it, like maybe husband, father, or brother. So yeah, best is to learn ourselves and try it by ourselves. So that's about me. Thank you.
Hi, I'm Shweta here. Well, I am from Bangalore. So I am a commerce graduate. I have worked in an organization, in a conference call services, and account management specialist. So my father has been actively an investor since 2 decades. So he introduced me to the market, and I have been actively tracking the market for past 1.5 years. As of now, I'm trading equity, intraday equities. And since then, I have been working on the same. Thank you.
Who is next? And who offered to share their computer? What's her name?
Reena here.
Okay, Reena. So you know how to share your screen, right? That down button.
Yeah. I have opened.
You have to share the entire screen when I say so. But I will do that once we get the basic Excel structure ready, probably in 20 minutes or 30 minutes down the line.
Yeah, sure.
All right. So, and just a minute, what's your email ID? I'll send you the PPT so that you use the same PPT.
Chakravartirina@gmail.com.
Okay, so I'm sending you the slide deck. Just keep it handy. Yeah, I have sent that slide, so you can just keep it handy. Yeah, who's next?
I could go next, Cora. Hi, everyone. This is Kavita Keswan. I am in Bangalore. I got off the corporate treadmill almost like a few years ago and started to dabble with multiple things. Today, I'm a POSH consultant. POSH is prevention of sexual harassment at workplace. I'm also a fitness coach, and recently gotten into dabbling with markets. So I do intraday trading. Pretty novice, still a little wet behind my ears, but yeah, I'm trying to see what best I can learn through this initiative. That's me. Thanks.
Hello.
Yeah, we can hear you.
Yeah, this is Agira Chaudhary, and I'm basically a technical and research analyst, and my preferred domain is small and mid cap. My actual approach is manual approach. Like I follow corporate actions, like company development, and like do fusion with technical analysis. So things are manual. And I am also into intraday and swing trading of indices mainly. But the thing is, since I am very poor in backtesting and coding things, so I'm not able to use all these things effectively to get a better outcome. So this is the reason I'm joining this webinar.
All right, thanks, Jakra. Who is remaining? Anushri and Priyanka and Swati are remaining, I think. Just a quick 1 minute intro, so we can start.
Okay, I'll go about myself. So I am working in IT industry only from the past 10 years, and from last 2 years I've been experimenting in markets, and I've seen the ups and downs. So but I keep on trying different strategies, and I'm trying to stick to one strategy so that I can figure out the ups and downs more correctly. So that is all about me.
All right, so
Hello all, I'm Priyanka from Karnataka, and I have recently completed my MBA. So I'm invested in stock market. I want to start my trading journey. Actually, I'm new to the markets, and I'm looking forward to join on the show to start my trading journey. Thank you.
yeah, I mean, sorry, whoever has a background noise, just mute yourself. If there's a background noise, otherwise, yeah, you can just go ahead and talk. Yeah, I mean, who is? I think there are only a couple of guys are remaining. So if you can do it, you do it. Otherwise, we'll start the session. Rina, in case if I've sent you a different version, I am resending it to you. So you download this one.
Okay. Okay, fine. I had downloaded that one.
I don't know which version I've sent, so delete that. And
Okay, fine. Please send.
all right, so I don't need to put on slideshow because you can watch. If there is too much in the slide, then I will put a slideshow. All right, so this is a while we go along with the slides, we'll also build an Excel template. All right, so it's not just a theory or one-way story alone. Right, I mean, simply, this is just a theoretical definition, or where the history of your backtesting or statistics starts from. So this is a quote. Whenever you can, you count. It is done by Sir Francis Galton. He's English guy from Victorian era. I don't think many of you would have heard about him, but he's one of the greatest scientists or mathematician or whatever you can call, or an inventor. And that's why I attached the word polymath. So he's at least expert in 6 to 8 subjects, ranging from statistics, your maps in the olden days, right? So that is invented by him. Things like that. There's quite a few of inventions. While you may not have heard about him, but you would have definitely heard about Charles Darwin, right? How many of you heard Charles Darwin?
Yeah, of course.
Right, so he's Charles Darwin's cousin.
So evolution?
Know him in 2 degrees of separation, if not 6 degrees of separation. And then what is the backtesting? So it's basically you have some theory and you want to test it. You test it basically on the historical data set, because nobody gives you future data set. And your assumption here is the past history might repeat in the future, even though it is not. That is what everybody puts as a disclaimer. But we don't have a choice. So we have to at least take the historical data set and assume that that might be our hypothetical future returns. It's simply like whenever you are buying a car, you test drive and you take your entire family's opinion, right? And then decide to buy. So it's the same thing with any of your trading or investments. The trading and investments are interchanged. I mean, like, I don't really differentiate between them. So you can replace. If I say trading, it could be investing also. If I say investing, it could be trading also. And the simple fact is your investments are a little long-term horizon. So if your holding period is 1 year, it's a trade for 1 year. Your day trading, which I don't suggest, because the success in day trading is probably 3%, probably 5%. So you are competing against the top 3 or 5% out there in the world or in India, which is very difficult. So I wouldn't suggest. Right? Right. So now these are some of the historical data links that you should be aware of, if not already, because they're all free and they should be accurate data because they are the exchanges. All right. So the popular exchanges in India, both NSE and BSE. So now this is your NSE website. Right, you have home, you have whatever about, and market data. I'll just give you 2 minutes overview of how to navigate this website. So to do a snapshot of what's happening today, you just go here, indices. So it gives you a brief overview of, okay, Nifty is up 0.2%. Then there are various other indices, indexes or whatever, and they're up, down, things like that. So VIX is down 1%. Small cap index, which is up 1%. Things like that. And then if you hit any of this, you get what all the Nifty 50 components are doing, all the 50 stocks. All right, so you get a snapshot. Like JSW is up 2.5%, Grasim is up whatever 1% or something. And you also have this arrows. So the green arrow indicates it is trading at close to 52-week high. You can see like 1053 and 52-week high is 1053. If there is a red arrow, let's see if there are any red arrows. This one. This means it's trading at 52-week low, and he will give you some explanation. Right, within 2% of 52-week low, or within close to 52-week low. That small down arrow we have seen in against one company. This one, right? Asia Motors. So this is close to 52-week low, whereas this is at 52-week low, something like that. And then for a historical data set, you have to go resources. In the resources, you have historical reports. I'm not interested in all the stocks or anything. So if I want to download just a Nifty Index data, right? So I go here. How I came, resources, historical reports, and then this link. So I download what data I want. So I want Nifty data. Now Nifty data, I want it from so and so period. The problem is these guys only give you for 1 year. And so if you want to analyze the data for more than 1 year, this is useless. And then they have another sister concern site called this one, Nifty Indices data. So this is only index or indices data. So I select Nifty, which is equity, and Nifty 50, and I put whatever I want. Because if I want to analyze for 20 years, I just put 91, March 1st, whatever, until today, submit. Why is it taking so much time? Okay, so you basically get it, right? And then you have your BSE. Okay, so this one came, right? So you can download as much data as you want, like 20 years, 30 years, or 10 years, or whatever. No, it just takes some, the site is slow. That's it. And here, BSE, come to market data products. Then you'll see a link called market data. I don't know why that is hidden in the first time. And then you have historical stock prices and historical indices. Where are historical indices? Yeah, here. So you want to download historical indices. These are BSE specific index, whereas in NSE there are NSE specific index. There will be slight difference. So just for an example, BSE Sensex, which is only constituted of by taking top 30 companies as per some criteria, is up 1.15%, whereas NSE is up 0.2%. So it's a small difference, but the difference is coming because Nifty has a different composition versus BSE has a different composition. Right. Now, if you are analyzing, I would always, I'm not saying always, there is a small difference between BSE and NSE indices. And I'm not a proponent of either BSE or NSE. My interest is not in analyzing those indices. My interest is whether I can make money or not. But I prefer BSE for the simple reason. You can select BSE Sensex and I can operate. I want daily data, right? So daily data and then plug in from where to where, or I want a monthly data, plug in. He himself calculates the monthly data and gives it. So my analysis for this particular session is going to be on monthly time frame. So this is easy. That's why we are going to BSE. I mean, that's why I prefer BSE Sensex Index, right? I will just update these three links for your reference, just so that you can bookmark in this. All right, so now we know where to get the historical data set. And then we have two types of indices for anything. One is your normal index. The other one is total returns index. Just for an example, let's close BSE for the time being. Sorry, NSE, because we are doing the analysis on BSE. So I want from January 2021 to today. Right, so this is your normal index. So the normal index has given you how much returns? This into 100 divided by this minus 100. So that's 20% returns from January 1st to today. Now there will be a corresponding index for this called total index returns, which is called a TR. Let's see where the BSE Sensex TR is. Now we're able to find and okay, he hasn't given here. So let's just do this one. Okay, I won't do all the data. I'm just interested only in 1 year, right? So January 1st of last year to date. So this is your returns, which is 16,630 into 100 divided by this one minus 100. So about 18.63%. Now the corresponding total returns is Nifty 50 TR somewhere. Right, so this TR total returns. They're not here either. So I think that's why, I mean, like you interchange between each of these links because nobody is perfect in the data that we want. Okay, here, total returns index. This is Nifty 50. I'm just selecting that date because he doesn't give you for 1 year. So it was on 1995 on that day, and today where it is? Today is 11th. Today is at 23,917. So this is actually this into this. So by investing in Nifty Index, you got 18%, 18.63%. But because it pays dividends, they reinvest the dividends, you get that little extra percentage. So if you had invested in any of the Nifty Index, you would have got how much?
20%, roughly 20%.
20.28%.
27.
If you have invested the dividends back into it, whenever the dividend comes to you, instead of you spending it, you again reinvest. So you get it. You get 20.28%. If you use your dividend for your small expenses, you will only get 18.60%. I mean, if you spend it on your personal expense, you get 18.63. The difference is usually about 1.5%. Whatever is the Nifty dividend yield, 1.5 to 2%. It ranges. Right? Sometimes they pay more, sometimes they pay less. You can do it, but this is Anushra's question I'm answering. But again, I mean, it's up to you, like where you are comfortable. Like, do you get all the data that you require or not? And sometimes what happens is with this Google Finance and Yahoo Finance, they abruptly stop because it may not make sense to continue that website further. I mean, obviously, they are not doing charity. If they are not making the money, they might close down the site. Whereas NSE, there's no way that NSE can close because NSE is an exchange. It will be there. So that's the preference. But yeah, use whatever you are comfortable, provided you have the data. Right. So now there's no way we can we can invest in Nifty Index. We have to find an underlying which mimics like Nifty Index, or somebody invests on our behalf. Those are all called Nifty, I mean ETFs, exchange traded funds or what. So the Nifty Index, what is the ETF for that? How do you invest in Nifty Index?
We can get buy Nifty Bs or invest by mutual fund ETFs.
Yeah, so you can either invest in, you can buy Nifty Bs, you become an investor in Nifty Index, or you can go and buy a Nifty mutual fund, any mutual fund where the mutual fund invests based on the Nifty constituents. So there are like tons of Nifty mutual funds and tons of Nifty. There's not tons of Nifty Bs, there's only one Nifty Bs. So what we'll do is we will get where those data for Nifty Bs. So this is in the same site, select the stock. So this is the stock and enter ETF. And this is your Nifty Bs. So this is by Nippon. Earlier it was by Reliance Adag company. They sold it to Nippon. So that's the Nippon name attached to it. It's a Japanese firm, Nippon ETF and Nifty Bs. And whenever you decide to invest, either in first you decided to invest in Nifty. Now you have multiple choice, right? So make a practice to read what is Nifty Bs, right? So Nifty Bs, search just fact sheet, right? So this is what Nifty Bs fact sheet. Fund performance, 1 year CAGR is some 16%, 3 years it has given 17% returns. Since inception it is given so and so. The current value of this fund is 179.91. What is growth plan? What is growth plan? You will have for most of these mutual funds or ETFs, you will have two plans. One is growth plan or regular plan or something like that. So these growth plans are basically whenever you get the dividend, they invest. You don't need to tell them invest on my behalf. So they invest, they take the dividends, they invest it back on the same day. Whereas some other plans, they might give you that dividends and credit into your bank deposit, right? So that's the small difference between your dividend reinvestment and normal regular plans. Right. So this is what you have. If you had invested 1,000 rupees or 10,000 rupees, this would have become so and so as of today, blah, blah. And then you also have these numbers. Okay, they don't have the numbers here. Yeah, but that's one thing. And then where is the fact sheet? This is just a returns. Maybe product note.
I have a question like on backtesting.
Yeah, sorry, you tell me.
Okay, so last year Nifty has given very good results, so it will show very good in backtesting. But this year people are saying that either it will be a consolidation phase or it will be.
We will come to that. How to analyze all that, we'll come to that. We are not interested what people says. Like we have to decide on our own.
Okay.
The whole aim. Like people will say Nifty is going to 5,000 or 10,000. It's very bearish. Or people, there are some optimistic people. They might say, okay, some new economic policy comes and Nifty can shoot up to 25,000. But we don't believe any of them. We form our own opinion, right?
Yeah, right.
So this is another detailed fact sheet. So where you would have given a lot of details. So current net asset value as of some date, and then returns profile since launch date, whatever. And then what we have is, okay, this is how we invested your 100 rupees. So we has put 10%, 10 rupees in Reliance, 8.5 rupees in HDFC Bank. That is because the Nifty Index was composed like that on that day. So if you give him 100 rupees, you have all these 50 companies he invested on behalf of you. So he invested. So yesterday, what was the top stock? in Nifty? Which is the top gainer in Nifty yesterday? Cipla, right? Somewhere we were saying like Cipla was up 8%, 5% or whatever. So you would have made, he has invested 60 paisa of your 100 rupees in Cipla. So you would have gained 5% on Cipla. That 60 paisa would have gained 5%. So basically you are investing in all the 50 companies. That's the point. So if you invest 100 rupees, you have 1 rupee invested in Tata Motors. So you get the benefit of Tata Motors by an extent of 1 rupee in your 100 rupees. And you also get like the whole 50 companies are invested, right? So this is the composition as on that date. This is your returns profile. And he will give you these all risk profile or whatever. But what I'm looking at is what is the expense ratio. This is what the expense ratio. Somewhere he should give the website, but I don't know. I'm not able to navigate. So if you spend some time, you will get to know where I use this value. So this is the expense ratio. What does this mean?
Your administrative costs.
Because he is doing the work on behalf of you. You have given him 100 rupees, so he is splitting that 100 rupees into 10 rupees into Reliance, 1 rupee into Cipla, 1 rupee into some other stock. So there is a work for him, and nobody does work free for you. So he has to charge you something. So this charge is this much. So what does it translate for 100 rupees?
5 rupee.
5 paisa, not 5 rupees, right?
Yeah.
1% is 1 rupee, 0.05 is 5 paisa. So he charges that 5 paisa per year. Now again, he can't wait for the year, right? I mean, like he has to pay his employees salary, and he has to pay his rent because he has to sit somewhere. So that 5 paisa he will split into 250 working days, right? That means you will get 5 divided by 250 paisa, whatever is that, every day. So every day minuses that, and he will quote you that value. So if you give him 100 rupees in the morning, Nifty doesn't move anything. Nifty doesn't do anything for the day, but he will say, I have taken my 5 paisa away. So your worth is now 99.99 rupees and 95 paisa. Whatever that, right? So that's what the expense ratio. You need to pay attention to this. The lower the expense ratio, the higher the returns, or at least he is not charging you too much. Then there is another important thing which is called tracking error. So this is 0.09% for the last 1 year. I mean, that number is again 2011. You have to find somewhere where ideally this guy should be giving in his website. I'm not able to find that particular sheet. So I will send you that link if I find it. Otherwise, you spend like 5-10 minutes, you will get that. Right. So what does this mean? This is, he is not able to exactly invest your 100 rupees in the same fashion like what he is telling you. He may differ. He may delay in the sense, if you give him the money at 3 o'clock, he might invest at 3:30. By the time the prices would have changed. Things like that, right? So he is not obviously able to replicate this one. He will go and do some errors because various reasons like that. You are given him the money in the morning, but it has reached his bank only in the afternoon. Then he decided to do that investment at 3:15 or 3 o'clock. But again, the Nifty, this price is at 330 price, right? So there will be some small differences like that. So you won't get this exactly. You will get something less or more, but you won't get more anytime. Definitely, because nobody will win you. So it will always be less, most of the times. So instead of 20.29, you will get 0.09% less. So we will only get 20.2%. So that's tracking error. So you just need to be aware of these two. And the lower the tracking error, the better. Lower the expense ratio, the better. Now you take out all the Nifty mutual funds and write down what is the tracking error and what is the expense ratio. And you plus them, fund A, right? And fund B, fund C. Like everybody will have a Nifty product, ICICI Nifty mutual funds and HDFC mutual fund, Birla's mutual fund, or whatever. So Kotak mutual fund. Add both of them, your tracking error and your expense ratio. Add both of them, and the least one is what you should prefer, because you are only leaking that much returns, your expected returns. Well, last year your returns should have been 20.3%, but it will be obviously less because of expense ratio and tracking. So you want this number to be the lowest. Yeah.
Could I have a quick one? Is there a range, acceptable range for this both put together?
There's no acceptable range. It is all bargaining power, right? And obviously, bargaining power, because you are only talking about 5,000, 10,000 rupees. I mean, your regular investment.
Okay.
But the acceptable range for me, preferably, if he is just doing this Nifty Index, right? It changes only once in 6 months.
Okay.
There's no work for him. All that he has to do is 2 times in a year. Like if I've given him the money at the start of the year, he just needs to wait when the Nifty 50 composition changes, one in March and one in September. If there is a change, he needs to sell. Okay, Nifty changes is okay. Now S Bank is no more part of Nifty 50 Index. We have included HDFC Life. All that he needs to do is sell the S Bank value. Like if you have given him 1,000 rupees, right? So S Bank would be worth maybe 5 rupees, 10 rupees. So sell all the 10 rupees worth of S Bank stocks and buy HDFC Life, whatever stocks you will get for 10 rupees. That's the only action he is going to do in March. And again, if there are some changes in September, he will again do that. So he is only doing 2 actions on behalf of you. And other actions would be, you will be daily reporting, and monthly you will be sending you balance statement, all things like that. That's extra work you do. Now the acceptable range for a fund like this, where the actions are only 2 in a year, my preference would be not less than 0.2%.
Not okay, not more than.
There are some funds where they need to do activity on monthly basis for some reason, right?
Okay.
More
anything within 2% is acceptable.
0.2, not 2.
0.2. All right.
Yeah, 0.2.
Yeah, 2 is a little too much. Yeah.
2 means
thanks. I know.
In 5 years,
thanks,
100 rupees is he has eaten 10 rupees.
Yeah, I know. That's
so it is effectively only 90 rupees is what he is giving back to you.
Sure.
At 0.2%, he has eaten 1 rupee. Still 99 rupees, which is not bad. I mean, like you got it right now, right?
Yeah, I did. Thanks, Kura.
All right, so that's the basics, right? So now let's. So for this exercise, what we will do is we are calculating backtesting template, right? A hypothetical backtesting template. by investing in Nifty ETF every month or whatever, right? That's our hypothetical assumption. So we will download the Nifty Beast data. That's because there's no way to invest in Nifty. So we have to invest in some underlying of Nifty, either mutual fund or ETF. So we have selected Nifty Beast. Now, when it comes to backtesting metrics, there are tons of them. So we'll only cover what's important for us. So the first thing is how many number of trades, or basically data points. Your data points is how much data you downloaded, right? So you can download even one data point, like 5 minutes back she was asking, right? Last 1 year the returns were bad or good. This year may not be good or something. So analyzing only 1 year data is little bad because you are only getting 12 months. Now the standard practice from statistics is at least 25. Why 25? Because there is a term called sampling error, which is nothing but 1 divided by square root of sample size. And if you take only 4 samples, your error is 1 divided by square root of 4. That is 50% sampling error. And at 25, you are basically making an error of 20%, 1 divided by square root of 25, or 80% sampling accuracy. This is sampling accuracy, not the winning or losing accuracy. So the higher the sample, the higher the accurate your backtest would be. The industry standard typically is about 95% sampling. And that translates to about 1,000 or 1,000, some number. But we don't have that much data. Like we don't have 1,000 monthly data points. So 1,000 monthly data points is like 100 years. Right? So we have to choose something which is in between. So at least 25 sample size. Now this 25 sample size, when you do on a monthly data, it just corresponds to 2 years. Now the same question, last 2 years may be bad, very bad. Like if you had invested in COVID period, oh, this is like a very bad return. So obviously I cannot consider this period. Or you can start investing from last year, June 2020 to today, which is a one-way bull market. But again, you also admit that this is not going to be the case, because this is like market rallied without any disturbance, right? So what would be the solution for that? So instead of number of years or number of trades, you go back and do some cycle. So I would say at least 5 years. But again, the 5 years also has a problem, right? The 5 years is, it could have experienced just a one-way market cycle, just a bull, one-way bull market, or maybe a one-way bear market, or maybe consolidation market. So in which case my preference is I will go back and look for a data which includes both a bull phase and a bear market phase and a consolidation phase. That's one way of looking at market. And the second thing is, this market is little, market returns are little dependent on your economics, underlying country economics or whatever. And each country will go through 2 phases. One is economic boom, where everybody is getting a job and they're demanding the 30% hike salaries and everybody is happy. That's economic boom. And you will also get into economical recession where there is no jobs or there are very few jobs. And that's a part of cycle. Every thing goes through a cycle, cycles of ups and downs. So make sure you put your data has at least a recession like 2008, 2002 or 2001 was one recession, 2020 was COVID recession. Economic booms are all in between periods. This is a bit of joke or whatever, but yeah, maybe that political background all the economics. So you might want to include a period where both Democrats or Republics in US context, or BJP or Congress in Indian context should have ruled. So that makes at least 10 years, may not be 5 years. So I will look for 10 years. Right. So the point here is I am nailing down to 10 years because of so and so reasons. So what would be our 10 years back? So I will say January 10 years back, which is 2012. This is where we are doing a bit of hands-on from now, right? So he gives you open, high, low, close, and all unnecessary data. You can just delete. And if you observe, it was at 5,500 at one point of time, went up to 800, 900, 1,000, 1,200, 1,200, and then suddenly dropped to 129. Why? Why it dropped to 129 from 1,275?
No, COVID was starting that time.
There's no COVID. I mean, even in COVID, market dropped only 5%, but that's like a 90% drop, right? 1,200 to 130. That is because he found nobody is able to buy at 1,200 rupees a unit. So I will do a split.
Splitting.
And he has done a corporate action. The Nifty Bees issuer, which is Nifty Bees as a company, has done a corporate action called split. And that split seems to be 1:10 ratio, right? So you can just say, just a confirmation sake, Nifty Bees split date or something like that. That's exactly what he has done, right? In December, he has split from face value of 10 to 1. That's what the year we are, that's the month we are also looking at. So now what we have to do is, this is not 1,275 anymore. This is 1/10 of 1,270. This is as it is. So this becomes our close price. It is not 523. It is what it is.
1/10.
52. Right. So that's the actual data. So this is your Nifty Bees. Now I'm not interested in open, high, low, close prices, right? And because there is a formula here, I will just copy them into a notepad and again copy. And now I'm not interested in all these numbers. I'm only interested in this one. Right. And then I will save this as our working sheet, today's working sheet. The desktop. Today's date is 12th March 2022. Working sheet. And if I save in CSV, the formulas will vanish. So I have to save in Excel workbook. I may not be interested in all this third, fourth digits question, so I will reduce it to 2 digits. 2 digits. This is what my interest. Now, I'm also not interested in Jan 12 because I want to know what today's price is or what yesterday's price was. So I will shift the data to top to bottom instead of bottom to top. Right. So now I know today it is 180 rupees. Yesterday it was 181. 1 year ago it was 166, something like this, right? So I can read it better now. Rather than going up and down, at one go, I can just look at and tell the price. Okay, so all right. After this, what we are interested is how much returns we are getting per month. This is monthly data or whatever. So now your returns can be calculated in dollar terms or points or in percentage terms. We will simply say this is T+1. That is next month returns or next month returns in percentage. So here you get dollar returns, like you have invested $181, 181.81 rupees per one buying 1 unit. Now it has gone to 180.03. That means you lost $1.8. And if you do a percentage, you will get that percentage. And now my interest is mostly what happens next, not what happened today. So I'm shifting like this. So for February, I made, actually I lost $1.78 or 1.78 rupees. If I had just bought 1 unit, I would have lost 1.8 rupees. Or this into this much percentage. So that is 97%, sorry, 0.97% is what I lost. Now I can calculate all the returns up to March, which is 10 years. Now the assumption we are doing is every month we are buying and selling. Hypothetically, we are actually not doing that, but hypothetically, for this backtesting exercise purpose, we are considering like as if we are buying 1 unit or 1,000 rupees worth of Nifty Bs at end of Jan and selling it at February 22 and again buying them, right? So that's what our assumption is. So the first metric is your number of trades, which we have already seen, right? So number of metrics is just simply count of this one. So we made, how many trades we made? How many trades we made?
119.
120 trades, right? This number. Now, when we made this many trades, that's hypothetical trades. It's not like as if we are buying, we are like mimicking as if we are buying and selling. Instead of typing on the chat, you can talk because it looks like more interactive session. Right, so in this 120 trades, we would have won some, we would have lost some. How many trades we had won? That is count ifs. This one, tell me only the winning trades. You just need to practice this. I mean, if you want to be, if you want to get into the numbers game, these are the minimum Excel commands. I'm not discussing in detail. You should put that effort on your own. It might take a week, a month, or a year. But yeah, if you put in that effort on your free time, you don't need to depend on me or the seminar sellers. I can charge for this show also, right? You don't need to depend on me. or you don't need to depend on the guy who is teaching. If you put in your own effort. Okay, so anytime Excel you are typing the formula, it will give you the hints, so you can correct. But yeah, try to learn Excel at least, if not a big programming language, even if you are not from IT background or non-IT background or something like that. But the simple math you should be knowing when you are doing any investments or trading. What happened here? So we won 71 trades and we lost 120 minus 71 trades. So you can convert that 71 into percentage as well, right? So that is nothing but 71 into 100 divided by your 120. This is too much of clarity. So we'll reduce it to readable number. Right, so 59.2 is easy to read rather than 59.168 or things like that. So I'm winning. How many times I'm winning?
59.2.
So every if I make 100 trades, I will win 59 times and I lose 41. Now that number, what should be the criteria? You can always argue like, oh, I want 100% winning, but it's not possible. Now, if I just play a coin toss, head or tails, I at least win 50% of the times. Right? So it has to be a little higher than 50 so that I'm in my comfort zone. Right? So what's your comfort zone? Any number. I mean, there's nothing wrong or right, because some guys will say 90 is my comfort number, which is fine. And some guys will say, oh, 40 is also my okay number, because if I win, I can win more. All right. So like if I'm losing every time $1 in those 60 instances, but if I'm making $2 when I win, I'm okay even if I win 40%, right? Now, you also can say 90 times you are winning 10 paisa and 10 times you lose, you might lose 10 rupees each, which is a bad trade, right? So you are winning 90 times, which is 10 paisa, which will make only 9 rupees. But in the rest of the 10 trades, if you are losing 10 rupees each on each trade, you are losing 100 rupees overall. So there is no right or wrong answer. So it is, you have to put in. So for this exercise, I might say, I am okay if it is more than 55, right? So I'll go here, I'll do something like 50 is green, and anything less than 50 is red. Just color coding. I think this slide should have been on the other place, like here. So now you can do this returns, right? So how much I'm winning when I win, or how much I'm losing when I'm losing, in either on points, which are nothing but your dollars or rupees, or on percentages, right? Okay, so let me do how much on average I win. This is dollars. Dollars are nothing but points. So how much is the average? It just simply average of this one. Yeah, so how much I make on average in Nifty? Simply this one, right? It's just $1 every time I make on average. Sometimes I lose $5, sometimes I make $14, but average of it is $1. Now average losing points. If I lose, it's not like that all the time I will be winning. I also lose, right? So it is simply, so this is average of all. Average of all, and then average of only winning. If I win, how much I win, and if I lose, how much I lose. This is nothing but simply average if. So if I win on average, I might win $3.86. If I lose, how much I lose? I lose $3. All right, so I also can sum all the money that I won in dollar terms, right? So that is called your gross profit. And I can also sum all the money that I lost. That is called gross loss. So what is the gross profit? It is just simply sum of all the time I won the dollars. And all the time I lost. Okay, somebody read it for me. These two numbers. Yeah, just read it loud.
So gross profit will be 273.83. Gross loss will be minus 146.88.
Yeah, so simply I won $274 and I lost $147.
146.
That's what it is, right? Now what you can do is you can just simply divide each of them, which is because there is a negative number, you want to translate it into absolute number, positive number. So I will put absolute, this divided by this. So what is this? Again, read that number for me.
So it will be 1.86.
Profit.
That's a profit. Yeah.
What does it mean in your betting terminology? I mean, translate it into your betting world.
That's a win. Profit.
Betting in this particular world, it means for every $1 I lost, I am making $1.86.
$86, yeah, okay.
That's what the profit factor is, right? I mean, if you analyze in the betting world, you lose some bets, you win some bets. So for every $1 you are losing, you will make $1.86. Not immediately, but over a period of 120 trades, right? Now we can do all these numbers in percentages as well. So simply copy this here. So these are points, these are percents. Here you will get the same, you don't get any. These numbers will be same, whether you do it on percents or points. The rest of the numbers differ. So there's a slight difference, right? So you are making, if you are winning, you are winning 3.9%, 4% close to. And if you are losing 3%. Now you can also sum all these percentages and you will get some number. But this number doesn't make sense. Why? Because let's say I'm just starting, right? Starting with 100 rupees and 100 rupees in both the cases. And this is points. So I made any number you can tell me. I made 2 rupees on first month. This is first month, right? Month 1. Then month 2. Then month 3. Then month 4. Then month 5. Okay, we'll just stop at month 5. So I made $2. Then I lost, you just tell me some number, minus $3. Then again I made money, $4. Then I lost $10. Then I made $20. Just some numbers, random numbers, right? These are points. So how much my 100 would have become now? This is simply this plus this $102. And now I lost $3, so it is $99. Now I made $4, it's 103. I lost $10, 93. Then I made $20. So final money that I have is now 130. Now I also can convert this $2 into percents, which is so the $2 translates to 2%. Now, whereas $3 translates to 2.94, things like that. Now, if I add them, I shouldn't be adding, I should be multiplying. Right, so I have 102%. Now it has become 99%. Okay, sorry, I have to add, right? If I add these percentages, just for the heck of it, I'm getting a different number. Obviously, I'll get a different number, right? So that number is not a small difference. It's a big difference. The difference is 113 plus 113 versus 115. So the point that here I'm trying to make is your points add up, whereas your percentage doesn't add up. Why they don't add up? Even though it looks like you made 114.9%, obviously this translates to only 13%, because finally you had $13 and your original investment was $100. So you made only 13%. Whereas here it is showing you 15% returns, right? Like if you sum all the averages. So that is a small difference that you need to be aware. We'll see how we can do, we can encounter, or like we will find a way to visualize in a different format. Now coming back to these numbers, we don't know what it is. I mean, like we know what it is, but we want to translate it into like this statement. If you had invested, right? So that Nifty guy is showing you Nifty B's like this, right? Like this sheet. If we had invested 10,000 from so and so date, it would have become this much. Right now, we will see how to get those numbers. So what we'll do is we'll go back and we'll just say what is your starting investment. You can put lakh, crore, thousand or anything, but 100 is very easy to visualize and to get our numbers in place. Obviously, if 100 has become 200, your lakh would have become 2 lakhs. If 100 has become 200, sorry, if 100 has become 50 rupees, your crore would have become how much?
50 lakhs.
So
Crore, 50.
Yeah, 50 lakhs. It's easy to visualize with 100, right? So that's why I'm starting at 100. And I have to add what is bottom plus this. So I made, okay, no, this is not the way. So I'm just multiplying this into this because I lost 0.92%. My 100 has become $99.08. Now again I lost. I won here. I lost. I won. So I simply go up. So my 100 becomes so how much my 100 has become?
339.
It has become 339 rupees as of now. And
But that's a percentage, right?
it's not a percentage. We have taken 100 and done percentage wise. Like this 100 has become, we are multiplying all those hundreds.
Okay.
With the percentages. If you were to do with the dollars, what you have to do is you have to tell how many units you got. For 100 rupees, you would have got how many units you would have got on that day. I will just put you would have actually got 1.81 units you would have purchased on that date. $1.81. Now you will have 1.81 into this number, which is the same. It should be the same, but I think it's not 1.81. It is some other number. This number is some number. 1.812, that is. So I'll just simply point it. Why they are not equal, if you ask me. They don't match because you have to stop at B3. Yeah, now they match more or less, right?
Yeah.
They still don't match. There will be slight difference because you are doing T+1, like future assumption, and we don't have the future assumption for March because we'll get only in April.
Okay.
So we will delete this because it's there is a slight confusion. So your 100 has become 139. Sorry, 339 rupees. And what does it mean? What does it translate to? It has taken 10 years because number of months is 120. So every month you will be growing some amount, or instead of monthly, which is too much of headache for you to track, you will track yearly, right? So your yearly is nothing but number of years. How many years you have invested? This divided by 12, 10 years, and it's the same. And at what rate it is growing? So you can say that is 339 rupees means you got 240 return, 240% extra returns, right? 240 divided by 10 or whatever, but that's not the way. So you have to do compounding. So your compounding is simply this formula, power of this number, and you started at 100 and 1 by this many years into 100 minus 7. So you basically are growing at, what is your rate of return every year?
12.99%.
13%, right?
13%, yeah.
So you started with 100 rupees and it's growing at 13% at each year end, and finally it became  what number?
200% something.
339. You started with 100.
Yeah,
And
percentage wise.
growing at 13% per year. This is the number. And today it has become 339. Does it make sense?
Yes.
I mean, just to convert these numbers, whatever you are seeing, into a one word statement, one line statement. The way that I will put is, I mean, if I'm telling my kid, we started with 100 rupees 10 years back on March 2012, and it has grown at 13% every year. And as of today, that 100 rupees is worth is 339.2. And that's how I make one line statement, by clubbing all those, whatever I highlighted in the box. Right?
Yeah.
Is it complicated or is it simple? Am I complicated?
Now,
Simplifying.
It makes sense, Cora.
now it's simple.
Right. I think we're a little delayed, but that's okay. I mean, like, even I'm like trying to interact, right? So, I don't want to speed up. I can speed up, like just not giving a chance on going one way. But I want to go a little slower so that you digest. Even if you are spending, I appreciate you spending some time, and it is going little beyond what you would have scheduled or budgeted for, but it's okay. I mean, like, just like sit through for 1 hour extra or whatever, it's okay. What we'll do is we'll take a small break, 5 minutes, and rejoin. I'm not disconnecting or anything, so you can grab your tea, coffee, or hug your kid and come back, and let the recording be in pause mode and continue with a 5 minutes gap in between. It's 12:05. I want Reena to be in proper shape with our computer and Excel when we come back. And I'm muting myself, and I'll be back at 5 minutes, which is 12:10.
Okay.
Okay.
Yeah, so let's start. Right, so we have done the averages. The averages are average because they can tilt. In one trade, you can make 100%. In all other trades, you don't make any money. Like let's say 10 trades. It looks like you made 10% on each trade. But that's a wrong figure because it's just like coming from one trade. So you look at median. Median is nothing but where the midpoint is. At least 50% of the times you are making that much money, more than that much money, and 50% of the times you are losing than that much. So here you can go and do a median. It's just a median. This is median of what does wait instead this particular number or for anybody? I mean, you attempt, whether it's right or wrong, you have to attempt, right? You are learning. It's not that I learned everything, I also learned the hard way. So how do you read that number, which I highlighted in yellow?
So most of the times kind of median, like, so if you take amount kind of peak value that you can see, that's all.
You have to simplify, your kid won't understand.
So if I have 5 values, so the midway value that you can say, like if I have 1, 2, 3, 4, 5, so 3 would be my median. So
Yes. That's a half simplifying, but I still will get confused.
Okay.
So the way I put it is, whatever his name, his or her name is, dude, this 1.01 is nothing but 50% of the times you make more than 1.01 and 50% of the time you make less than this number, right? That's how I put that number. I read that number. Of course, in mathematical terms, it's a median. But if I were to explain to a small kid, you do 10 times, or if you play a game for 0.01 rupees, and 5 times you lose less than 1.01. That's how I put it, right? Then we also can calculate how much maximum we won and how much maximum we lost. I will simply call them as max and min. This is nothing but max in dollar terms. In particular 1 month, I made $14.5. That is July. The money that I invested in July has given me $14 at the end of August. And I can also do the percentage. That is, and some month I made 13.8%. You can see which month it is. And I also can figure out where I lost, how much I lost maximum. So I lost $27 in 1 month. Which month is that? If you can guess. Obviously, it will be COVID month. This month, February or March. For the investment or for the trade that you have done in February, you lost $27 by exiting at March. The same thing, you can convert that into percentages. Now in statistics, you also have a term called standard deviation, right? So that is this. I'll just put STD, which is standard deviation. That is nothing but stdev.p. This standard deviation term is a bit irritating and bit intimidating if you don't know the math, right? And there is a bit of argument. The argument comes in how the in statistic terms you take the returns and you plot a distribution. The distribution, if you plot, you will get some graph. It may not be a graph like this. It may be a graph of something else or something else. So each graph shape has a name to it. So the names would be normal distribution. If the shape of this graph closely resembles, then you call that as a normal distribution. And if it the shape is something else, it is some other distribution. You don't need to know all that. Even I don't need to know all that because I'm not trying to become an expert in either teaching the distributions or making the distributions. I don't make money like that. Only statistics professors or somebody makes money. Our objective here is know the number and use it, not become an expert. Right? So if you do any images, you'll get plethora, I mean like a lot of shapes like this. So each shape is uniform distribution, binomial, Poisson, normal, log normal, variable, beta, gamma. So there's no end to it. But as I said, I'm not trying to become, this is normal, right? Trying to become an expert in this. Now the argument is the stocks are not normally distributed. They are of some form because you can see the returns are all over the place. If you just draw a graph of this, I think you have to arrange them in one sequence and draw a graph. You will get a different graph. So, and you can't tell what that graph is, shape is, and I mean the shape something closely resembles to this, so you can't tell it. So it is definitely not normal. Yes, we know that it is something else. We also know that we are not interested what that something else is. Now, assuming we are only assuming the stocks are normally distributed. So a normal distribution shape is something like this. So this small, that round and that one is called sigma or standard deviation. That's how you write it. You don't write standard deviation, you write that small character, which is like round and O plus something else. I don't know. You can tell me what that letter looks like. Right. So now you have 1, 2, 3 like that. 1 sigma, 2 sigma, 3 sigma. 1 sigma is nothing but 68%. That is 34% down and 34% up. So you'll get 68% coverage. And 68 plus 13 plus 13, that is about 95%. That is 2 sigma. If you understand it, it's okay. If you don't understand it also, is okay. Right? Just remember this 1 sigma and 2 sigma. So here, we'll just do 1 sigma. Why we are doing this? Suppose if I ask you, what would be the returns in February? Because the month is not yet completed, the month will complete after another 20 days. And Nifty can, this Nifty B's, where will that Nifty B's will be? Where will it land? Just take a guess. Hello?
Yeah, after how many years?
5 maybe.
The end of March, which is March 31st. I know. Oh God, sorry, there was a small internet switchover in the last 2 minutes. The question that I was asking is where it will be. So the best answer for that is nobody knows. I don't know. Neither you know nor anybody else out there knows. If you really know it, you can become a millionaire overnight. Right. So, but that would be the best answer. Where does Nifty end in March 22? Either it could be less than 181.81 or above it. Now, instead of saying above or below, we say in sigma world. That is nothing but what is your average? This one plus 1 sigma. On the upside, it can return 5.8%. Or on the downside, it can go down 3.52%. So this is my range for Nifty. For March, it can do either of them in percentage terms at 68% confidence level. So when I make a statement like what will Nifty do in March? Or it can go up by 5.8% or it can go down to 3.5%. So the range is in between 3.5 to 5.8%. And I am confident at 68%. That's what this 68% is. Now I also can make the same statement in a much wider range. So this is average plus 2 times. And average minus 2 times. Now, how do you translate this numbers? in an understandable way? These two numbers, whatever I highlighted in the box. So if somebody can attempt, I will help them. Yeah, give it a try.
Is it a worst case, best case scenario?
It is not worst case. It is you are 95% confident. I mean, when you are answering.
Oh, your confidence level is
Yeah,
increased.
your confidence is at 95% level. That you are giving a range of 10.4% or -8%. I mean, you can never be 100% confident because nobody knows. If you are 100% confident, then you will become millionaire overnight, as I said. Not millionaire overnight, but maybe millionaire in a year, even if you start with 1,000 rupees. Right, so that's how the sigma or standard deviation simplified. I hope I simplified, but that's what the statement is. So when somebody throws me these numbers, this is what we have built it, and it may look like complex, but it is simple. So if you go back and watch the record again, you can see what all the formulas I typed, and I haven't typed any rocket science formulas. They're all maybe simple, may not be simple, but that's fine. Yeah, so that yellow highlighted box, if I have to tell in a little easier way, yes, I know that stocks are not normally distributed, but assuming they are normally distributed, I have a 95% confidence answer for you. In the month of March, Nifty can return in either up to 10.4% returns on the upside or -8%, 8.17% on the downside. It will be somewhere in between. That is what my best answer is. Right? Does it make sense now?
Yes.
Yep.
Yes.
Now, the next step is we also can draw a graph. Right? So a graph of this, and sorry, I think we'll just delete January 12 because it's of no use for us. So we started at February 12, and we'll draw a graph of this and this. Insert. So we'll get a graph like this. Right? So now all the numbers have become some picture. You can see this, or you want me to increase?
No, this is good.
You can see it, right? So how the 100 is become 340 or whatever the final number is. It gyrated. So it started at 100, then it went to 150, and then it has become it has fallen again. So it has gone to 133, and it is going up here, then down here, up here, down here. You become quite a bit rich. It has become 243, and by the time you are planning to do a vacation or whatever, buy a car, your plans have become bad because COVID has come and your 243 has gone to 172. Right? And then again from 120, 172, it is up and down, and it has gone all the way to some big number. which is 360. Now again, the stupid Ukraine war has come, so it is gone down to 340. Right, so that's what is happening. If in the graph, I will leave this graph into a paint and attach into that presentation. So I don't, I will remove that graph. So this graph is simply called equity curve in financial world or mutual world or mutual fund world or whatever. This gives you a depiction of how our 100 has become what the number today is. Now this 100, if it is going to 350 in a straight fashion by adding $2 every month, like 102, 104, I would be more than happy because it's a straight path. Unfortunately, it is not straight path. It is going up and down, right? So now we have to measure those ups and downs. We are not interested in up, but at least let's measure the down. So this is your MDD, maximum drawdown. That is the term, right? So the maximum drawdown is how much maximum money I had prior to this. Max money prior to this. You have to do a log. Into 100 divided by this number minus 100. Okay, now if you convert them into percentage terms, so the maximum that you had before this was 360. I think so, right? At one point of time on September 21st, your 100 has gone up all the way to 360. And from then onwards, it started falling and reached 339 as of today. If you convert them into percentage terms, it is 5.8%. So this is the drawdown you are facing now. Like you are at one point of time, you had seen your equity at 360, your balance, monthly balance, end of the balance, but now it has fallen to 339 rupees. What it means is you are down by 6%, 5.8%. So you can now do that.
As you're doing this, quick question. What is the relevance of this? How is this going to help me? The max drawdown or the min drawdown?
We are measuring it. I will tell you the implications.
Sure.
In a few minutes. I mean, first we are measuring it. Then I will state what it means to you.
Sure, thanks.
Right. So now you just simply gone and calculated all of this, and we will just simply find that value. What is the maximum drawdown figure?
29.
29%. That means your 100 has become 339, not in a straight fashion, but going through ups and downs. Yeah, 100 becomes 110 1 month, then it drops to 105, then again it becomes 150, something like that. It's not a straight path, that 100 to 339. I would be more than happy if it is a straight path. but unfortunately the world is not so. It will go through gyrations, and it has gyrated to a worst case somewhere, that is here, where I was rich. I had 100 rupees in bank here. Now I've gone through a drawdown of 29%. So suddenly it has become 71%. Somewhere here, I was rich and I had a 100 rupees in the bank, and suddenly it has become 80. Whereas here it has become 70. So the worst of all that, where at one point of time I was rich, and then suddenly I became poor by a little bit. So here I am poor by 10%. Here I am poor by 20%. Somewhere else I might be poor by 5%. Where am I maximum poorest or minimum poorest, whatever is the correct word, is your maximum drawdown. So in my 10 years journey, the maximum poorest I was 29%. Now what it means is, at least this is what has happened historically. It's a good number, right? So who will give you, if 10 years back, if you had given 100 rupees to somebody, who will give back 339 to you today? It's a good number. I mean, you compare that with all of your investments, putting in real estate, or putting in your jewelry, or putting in your car, or any assets that you have in your house. I don't think you would have achieved 339. Maybe you would have achieved, I don't know, but 339 is a good number. And another advantage of this 339 is you pay only one-time tax. If you want the 339 back into your account as a cash now, you have to pay 10% tax on the 239, because you made $239, and then you get back something. Whereas if that 100 rupees you invested in a real estate and it is really worth 339 today, what all you have to pay to get back the 339? What all you have to do if you have to sell your real estate or apartment or house which is worth 339 today? Yeah, I mean, it's just a simple answer. I mean, you can answer. You can attempt to answer.
Sorry, Cora, I don't have a house to sell. On a lighter note.
Okay, so the first thing is you have to call a broker, and the broker will say, okay, this house may not be worth 339 or whatever. Okay, then you agree some number. Then the broker say, wait, I'll find some buyers. So the buyers will keep coming to your house. They will also negotiate, and then they will say, oh, I don't have 339 rupees. I have to go to the bank, wait for 2 months. I have to apply for a loan, and you will wait. You will apply for a loan, and the 339 will come down to 330 because he will tell some story, and you are also in emergency of the money. So finally you will decide at 320 or 310. And then you will pay some registration tax or whatever. The buyer, the seller will have to pay some property gain tax, and the broker will come and ask you 1%. So you have to pay him 1%. So finally you may get a much lesser number than that. Whereas here, all that you do is, I don't know which brokerage platform you use. You say sell at 339, maybe a little less. You will give a discount of 10 paisa to the new buyer, new buyer. So instead of 339.2, you will sell it for 339, and Zerodha will charge you 20 rupees broker, whatever. So you minus that. Then the money will come into your bank by day after tomorrow. You pay 10% tax on it. Be done. So all the transaction is done in 2 days, whereas your real estate transaction takes 6 months, 1 year, or it doesn't happen at 339. So that's the difference between your real estate and equities. So that is your MDD, right? Maximum drawdown. now whoever is asked that question, you can translate why it is important or what does it mean for me. Or what does it mean for me? So you can translate that number for, you can translate that yellow highlighted item for me.
So the max I lose is, max I've lost is
At some point of time,
30.
yeah, to gain
That
that 100 rupees
Yeah.
To 330
30 rupees.
point of time, you had gone through a pain of 29% loss.
Yeah.
Right?
But it's still just a number, Kora. That's why in my head, I'm not able to say, is it good or bad?
It's a number, but you have to be prepared. So if you hit 29% in future, right?
Okay.
You know that historically also I've seen 30% drawdown. So I'm prepared. I'm not worried. So now people are worried here. Right? Here you're already down 6%.
Okay.
What
Yes.
Don't worry for 6% because you have seen 30% in
Oh,
the
it's well within that. Okay.
well within
Sounds
that
good.
historical number. So there's nothing here. We get just a 6% drawdown.
Got it. That makes sense.
And then this is a little not a complex term, something called how much time I'm in drawdown. Right, so I'm just writing a small if else condition. Okay, so I've done some if else condition. I don't want to break your heads or whatever. Just assume that I've written some formula. And now I'm translating it for you. What it means is today is March 22. On September 21st, I have seen my peak equity curve, which was at 360. Right? That's what it is, the small formula that I have written. Yes, that is what is true. On September 21st, I have seen my bank balance as 360 and today it is 339, which is less than what I had seen in September. So how many months it is from there to here? It's about 150 days. Now translate that into months. Now it round. So you spent 5 months cursing yourself. Oh, I should have booked my profit on 360 on September. Oh, why I didn't book? Now I'm down to 339. So you are cursing your luck or somebody else for 5 months in a row, right? That's what it means. Now, if you just drag this, and this is eventually see here what happened is you curse for 10 months. This period. You are at 243, and then you've never seen the 243 in your lifetime for the next 10 months. So then you have seen 260. So you are cursing somebody for 10 months in a row here, right? So we will define that as recovery time. So which is nothing but max of this. So the maximum time you curse somebody where you haven't seen the previous highest balance was 17 months. You can find where it is, that 17. This is the place. There will be a number of reasons. We are not getting into that, why it took 17 months or whatever, but that is what it is. So on Jan 15th, you have seen your account balance at 168.63, and you have never seen that back again till July 16th, right? Here. Yes, that's what it translates to. So if somebody can read it for me, the way that I would read is on Jan 15th, I had seen my account balance for at 168.63, and I have never seen that number again for next 17 months up to June 16th, and only in July 16th I have seen that number again, a higher number than that, right? So that is what the recovery time means. Then you can also say how much time you are in drawdown, right?
So do you mean it is a 17 months time drawdown?
Yes, time drawdown is 17 months. Yes, I mean that's what a simple word is. Or recovery time is 17 months. And then you also can say how much time I was always in drawdown, right? So that is during your 120 months of investing journey, you are always in drawdown for 76 months. And you can calculate that percentage time in drawdown. Which is 76 into 100 divided by how many months our investing journey or trading journey is 120 months. So what it means?
63% of the time it was indeed.
63% of the time you will be unhappy, right? Unhappy because you are down from peak. Only 37% of the times you are happy. That means you are seeing the peak. I mean, this month you are happy on September because you had seen your highest bank balance in the bank balance. And then again it has dropped down. So you are unhappy. Whereas here you are happy. So the way in simplistic terms is, yeah, so 63% of the times you will be unhappy with yourself and 37% of the time you are happy. With that, I would ask you a question, and we are done. Actually, this is only the first portion. Let me see where I have it. Okay, let me just. You have two choices: choice of A and choice of B. You can invest, you can choose whatever you want. The choice A gives you 10% returns per annum. Choice B also gives 10% of returns. Choice A comes with 20% of the drawdown. Choice B comes with 5% of the drawdown. Whereas choice A comes with a drawdown duration or recovery time or time in drawdown is 6 months. Choice B is 2 years. Which is better?
When max TD is lower, it is better in terms of investment.
Which is better? Sorry, B or A?
Since max drawdown for B is 5%, so we'll go with B.
Yeah.
So you prefer B, right?
B.
But I also can say, who is it?
It comes with a terms and condition if it is for long-term investment.
Yeah, but you are like suffering in drawdown for 2 years. So why don't you make a choice of A? Both of them are same, right? So you can argue. We can keep on arguing. nobody wins, but we all go back saying, okay, you are right, I am right, you are right, I am right. Better fight and nobody will be right. Everybody will be watching. So it's a choice between your risk and reward profile. So yes, there is nothing wrong in choosing B because it's the same returns. There is nothing wrong in choosing A because it's the same returns. Now it comes down to your temperament. Oh, I can withstand 20% drawdown. So then go for A. Oh, I can't take 20% drawdown. Then go for B. Because, but another way of looking at is, oh, I can't wait for 2 years of pain. Then go for A. But A comes with 20% drawdown. So it's a choice. Like you have to evaluate what's your risk profile, right? And there's no right or wrong answer. Nobody can tell what's your risk profile, right? So some humans falls into, because of their nature, they fall into bucket A. And because of their nature, somebody else's nature, they fall into bucket B. And nothing is wrong. There's no right or wrong answer because it's you who has to answer the question honestly. So yeah, I mean, either A is good for you, yeah, it's up to you. For somebody, B will be a good choice, which is fine. So that's where your risk profile comes. So if you are high risk, then go for A. If you are low risk, go for B. And if you are impatient, go for A. If you are patient, go for B. And that's what it is, right? Now we'll just take 2 minutes, 5 minutes and wind up the session. Even though it is not complete, I will do it and upload the video. Maybe even 1 or 2 folks join with me. It will be a little interactive. But I don't want to bother anymore for the day. So we will wind up in 10 minutes. So if Reena can share her screen.
Yes, sure.
Yeah, so Reena, I've sent you this particular Excel sheet. So just check your email.
Just a moment.
It's not a come. I'm just sending it. So,
yeah, I want to see that.
Reena, Excel sheet. Send it. So you got it, and then I'm stopping my share. You share your screen with entire screen shared.
Okay, one moment. Not okay, I just received that.
Yeah, you have to share your screen so we can see.
Yeah, I'm just downloading the Excel.
Okay.
Okay. Now I'll share my screen. Let me know if you're able to see my screen.
Yeah, we can.
We can, right? So now what you do is the down of 590103 is there, right? Down the sheet. Oh no, on the left-hand side. Sheet name is 590103.
Yes.
Click that. Write it Nifty Bees. Just double click it. Rename. Yeah, that is Nifty Bees. BEE, that is. Yeah, whatever. Yeah, that's fine. No, we are not doing a spelling class here. Now, what I want you to do is, you have all the metrics for Nifty Bees. So now, because you have a template, you can create for whatever you want. So just copy that sheet, make a copy. And now go to bscindia.com BSC India. Market data products and market data on the top. On the top, right. Come down. Historical stock prices. Historical stock prices. The second block.
Okay.
And equity and the segment, equity, it's mutual funds, equity, the segment, ETFs, and we'll just do for bank Bs. Type bank Bs. And the same thing, monthly from I took from January 2012, Jan 2012, down year, and then year is there, right? 2012, submit, download. The top, go on to the top, go on the top. That small save button is there, right? So right side, that. Open that. So just we'll observe. So it started at 994 and went all the way to come down. Went all the way to 1820, then 17, then 19. Keep coming down. Then 2000, then 28, then yeah, keep. So then suddenly it has done 328. See there. That's where the split is. December 19. So now make a column in F. Just come to F96. F96. No.
Sorry.
Go to F96. Yeah, go there. Equals to that F96 divided by 10. Enter.
Oh.
Oh, sorry, E96. E, not F96. Now copy that formula above. Above. No, not down, above.
Just a moment.
Yeah.
Oops.
Divided by 10.
Okay.
And copy above. Copy above to F2.
F2.
Or okay, copy F2 to that formula all the way down. I'll tell you. There's another way to do it. Now come to the December 29th. From there, you shouldn't be doing that by 10. It has to be by 1, right?
This one?
The next item.
Hmm?
That has to be not by 10, it has to be by 1 only. Also, just simply equals to E97 is what you put. From there, you don't need to apply that formula. Yes. Now do that. Now again, copy that F97 to F down all the way to F125. Now what you do is reverse it. Select all. You are doing a sort. Select all.
The entire thing.
Yeah, the entire thing. Select data, hit the data bar, and say sort, and sort by date, month. Yeah. Order is new to old. Okay. Now go to your other sheet.
Just a minute. Where
Copy that. And
Okay.
name that sheet one as Bank Nifty. Just make this is Bank Bs. And the heading on B1 become heading on B1 becomes no on the B1 it becomes Bank Bs.
Sorry. Where?
Yeah, just type it instead of Bank Bs, Nifty Bs, you write Bank Bs.
Okay. Okay.
Go to the other sheet. You have the dates which should be similar, but just copy all the dates from A to entire dates. Copy, paste it in the month, the column A. Delete whatever is in the entire B. Delete the entire B. Delete it. Now go to your other sheet. No, go to your other sheet.
Okay.
That F column is what you have to say. F, copy and paste as values there, because there is a formula, right? So paste. No, paste. You have to paste as values. Right click. Paste special. Yeah, that's. Now instead of number of shares, you change it to Bank Bs.
Okay.
You are done. Now you have your Bank Nifty profile. So your Bank Nifty profile is
Okay.
your 100 has given you 332, whereas Nifty Bs, how much Nifty Bs has given?
Yeah.
339.
It is 339. So your Bank B, actually what you can do is you just copy all this. Copy I2 to K, all the values and up to K, and paste it in Bank Bs as values side by side.
Yes.
Yeah, there.
So sorry.
Yeah, paste as values.
Yeah.
Yeah, and change that precision to go to J and press your mouse on entire J. Select that brush, format painter. Format painter. No, format painter. On the left hand side, go on the left hand side, format painter, and put that on entire O, that brush. What I have done is you have just shifted one row below.
Oops.
When you pasted, right, you should have pasted on N2, whereas you pasted on N3.
Just a moment. I'll do that.
And now you do that paint stuff, that brush. The same thing on K and P. Take the brush on K, get the brush and do that on P. Now we have a side-by-side comparison of Nifty Bs and Bank Bs, and tell me what's your preference and why. And I will debate just for 2 minutes. I mean, You could be right, you could be wrong. And I also could be right, and I also could be wrong. Because the way we look at the things is different.
Bank B's probably.
Why? It has given you less returns because it is given you only 332 versus Nifty of 339.
But if you see average of all points on an average, whenever you make profit, so in your Nifty you make 1.06, but when you
Where
go
is
for
1.06? Just highlight that.
yeah, okay.
That's a points, but again,
Here you get 2.03.
no, that is not a right metric. You have to look at K of that item. That is dollar because Bank Nifty is quoting at a very high number. So your 100 rupees, you will only get 1.3 Bank Nifty.
Look at the percentage wins. It's better for bank.
It's just a small high number, yeah.
And then you also look at this average of win points. So that
So the way that I look is, so now select all, unhighlight everything. I mean, those yellow colors are there. I'll tell you the way I look at it. So remove all the yellows, select, control all, select all, remove that no fill, put it no fill. No, you have to put no fill, otherwise those dashes will go.
Cora, sorry to interrupt just for a minute, and I joined a little late, and I would like to leave now. I have some other commitments.
Yes, you can leave. We
Okay.
are done by 5 minutes.
Yeah, bye.
Yeah, Reena. So the way that I look, just highlight the terms I strictly look at. Okay, so 100 becomes, that is my important thing. So highlight 100 becomes columns. No, here, there, in the I21 is that. So select I21 and all that 3, I and J and K, those 3 items. And highlight it yellow. As of now, my Nifty is high because it is giving me 339. So choice there is Bank Nifty. You write Bank Nifty as choice on OR. In the OR, go to R20, R20 cell.
R20 cell.
Yeah, there my Nifty is highest because P is Nifty, right? So my choice is Nifty. Nifty is.
Cora, you might also want to mention Nifty and Bank Nifty so that we know.
Yeah, then so she has to write on, go to I2 and write the heading. Then there is no confusion.
Yeah, it's easier that way.
So I2 is Bank, and that is Nifty. Save the sheet, save it, save, so that you don't lose all your hard work. Did you do Control S?
Yeah, I did.
Yeah, now you on your 100 becomes, you write your choice next to R2. Or in the R20, whatever is your choice. Which is the highest returns? That's what my choice would be.
Okay, that will be Nifty.
Yeah. Now percentage wins is of low importance, but still I would highlight and write just for the heck of it. Right? Go to percentage wins. Percentage wins.
Fifth one.
5. Highlight entire thing as yellow. There my choice would be
Nifty again.
Again Nifty. Okay. But I would give low importance to that.
Okay.
Trick. Then the next thing is the standard deviation metric, the number 10. Highlight that yellow. Here my thing would be lower standard deviation, it is better for me. So you might want to write a comment in S. Go in R, the corresponding S for the first one, R5, right? Higher the better. That's your, that's how you get. Now, when it comes to standard deviation, lower the better. Comments. Now come down, right?
Lower the better, right?
Lower the better. So now what is your choice? Which is the lower?
That's Nifty.
Right.
Okay.
Now go to profit factor.
Okay.
It's higher the better, because obviously for every $1 you are losing, you make, you prefer whatever is giving you high returns. Highlight that, again make it yellow so that you know what you guys are doing. I mean, which are the important factors to look at. Now CAGR, the 100 becomes is nothing but CAGR, so highlight it again. It is in the comments, you say it is nothing but 100 becomes column. Nothing but 100 becomes. I mean, it's not a new number as such. So here, what is it?
Okay, so for the bank Nifty, it is 12.77, and for Nifty, it was 12.99.
So higher the better. Yeah. So Nifty, your choice becomes Nifty. And then do a maximum drawdown percentage.
Sorry?
So higher the better. Nothing. Yeah.
Yeah.
Now, the maximum drawdown percentage, MDD percentage. Highlight. Here, what's your choice? Lower the better. Comment is lower the better. So which is lower?
Yeah, this so.
Yeah, right. Your choice. And recovery time also you can make the choice. Percentage drawdown, they're all lower the better. Percentage time in drawdown, everything is lower the better. But I won't look at it. I mean, how many items I can keep on looking at it? But you can highlight in a different color and write your choice. They're all lower the better. Don't do it. Just leave it. Don't wrap it. Let it be.
Okay. Nice.
Undo, Control Z. Yeah, that's it. So now you copy, you want time in drawdown, percentage in drawdown, lower the better, and then you make your choice.
Okay.
Down whatever is the better, and then that's what your choice would be. Right? Okay. So you got a perspective to question, a perspective to compare, and a perspective to make a choice. Yes or no?
Yes.
And if I am a salesman and I come to you and I say, buy bank biz, will you buy from me?
No.
Why?
The returns
attended.
Why? Because you have made this sheet and you will show this sheet to me. Right? Don't sell me wrong investment, because I know these factors. See, everywhere Nifty is 8 out of 10 score or 8 out of 8, whatever is that choices which are important to you. So I will go with Nifty. Right? That's how you answer me back. Or that's how you make an informed decision. Yes or no?
Yes.
Yes.
So the question is, we are done. Last 3 minutes or 2 minutes. So the question is, I hope you learned something, and it may be boring. Reena, you have to send me that, save that as working sheet, write your name, Reena or whatever, and send it to me immediately. Reply in the email.
I'll stop sharing.
Yeah, you stop sharing and you send that sheet to me. right now.
Yeah, doing it right away.
So the
Kora, if you just one quick question. So if you're taking a larger sample in your experience, if you're taking a larger sample, is this how it would have shown up? Nifty being better
maybe
than
yes,
time?
maybe no, but the whole point is you can take larger sample of years or 200 years, but the problem with that is I don't live for 100 years. I live only for 60 or 70 years if I'm lucky. And in that 60 years, I am dependent on somebody for 25 years, right?
Okay.
And again, I become 25 dependent after 60 because I am retired and I can't earn or anything. So I have to be either dependent on myself with my savings, or I have to beg and borrow my kids or somebody, right? Yes or no? After 60. Yes, right.
After
So,
giving us all this back-tested conversation,
whatever
want
it
me
is,
to make
the
a
point
guess?
is, whatever it is, the point is, start earning or you are independent from the age of 25, because that's when you start earning, and you will stop earning at the age of 60. So your entire living potential is only 30 years, 35 years or whatever.
Yes.
In that,
Yes.
when you start the job, you will get peanuts. They'll pay only 10,000 or 20,000. Where is the question of saving? So your earning potential increases maybe at the age of 35. So now it is come down to 25 years. So that's 60 minus 35, right? Now again, at the end, after your 55 to 50, 50 to 50, 50 to 60, we have few things to take care of. Your kid's wedding or whatever. So you only are living effectively how many years? 20 years, right? Approximately, plus or minus. So you, instead of doing all the 100 years garbage, you just do 20-25 years, which is suitable.
Which is back to the sampling error. Okay.
It has sampling error, but again, as I said, like every point in investing or financial world can be debatable in exactly opposite way, and we can keep on debating, and it's just evaluating the choice, which is better choice. That's
okay. Sure. Thanks, Kura.
what I'll do is I have a small question. I'm going to upload this video, and I'll also upload all the working sheet for anybody, whoever wants to pick it up. It's not necessarily the show applicants or show participants, but because we spent our valuable time of 3 hours, we have to, for the recording, we are not charging. They can watch it on free on YouTube. But if they want Excel sheets and PPT, right, there's worth something. And whatever you guys decide right now, we will price it that much. And all earnings, it could be 1 rupee, or it could be 1,000 rupees, or it could be 50,000 rupees, depending on how you promote, will go to your choice. Of the 8 participants, whoever sat through this horrible torturing session or whatever you could call, will go to their choice of charity. Now the question to you 8 participants is, what should be the price of these? Just throw a number. We will decide right now. It takes 1 minute. So Kavita, question to you is, did you learn something after 3 hours?
Oh yes, absolutely.
And
100%.
because it's I offered it free, you sat through it. But if I want to charge, how much will you be willing to pay for this? Don't be shy. Just throw any number.
No, I'm not shy. I'm just thinking maybe a 5K.
5K is too much. I mean, like, you are too generous.
Oh, it's too much, is it? Okay. Then
You can send it to me.
I mean, I was thinking of.
I don't.
Because I'm also getting the audio, right? I'm thinking of session, a 3-hour session, if I have to attend an online
I know.
3-hour
I mean,
session
you are a
with
consultant, so you are charging your consultant charges. So,
you.
okay, that 5K is too much. So
Maybe I can be
next, somebody else
conservative
can
and
attempt.
say 1,000. Yeah,
1,000. I
please.
think I would say 1,000 is also too much because there are so many. Also,
I would say
looking at-
I'm out of
500
this,
rupees.
Cora. I'm out
we
of
are
this.
also looking at educating somebody else, so we can't put them off.
500 rupees.
Yeah, maybe 500 is little high, so I would put it like 200. If that
Oh, wow. You've been very generous now.
Well, yeah.
No, but we are also educating. I mean, like, it's not me alone. It's all 8 of us alone. All 8 of us together. And
And also more people will pick it up. So 200 makes sense. So
Yeah.
we're reaching a larger.
you don't feel like cheating if it is 200, right? If
Yes.
1,000,
Yeah,
you
it's a
say,
larger number.
oh, let's 5 hours buy together and watch it. Download it. If it is 200, okay, I don't need to ask
Yeah.
to share the cost.
Yeah, and also whether they like it or not, they wouldn't feel bad.
And you don't again feel like cheated if it's 200 rupees just like a coffee or some small amount. I don't feel like cheated because I paid 200, right?
Makes sense.
Whether it's 1,000 or 5,000, you have a number of components, a number of comments. Oh, it's too expensive. I didn't learn anything. Can you return my? Or it's a way, all sorts of comments. So we will stick to 200.
Sure.
That's because you guys decided. And I will upload the video in once it's processed or format. And the video is free, but the working sheets and PPTs, if anybody wants to buy, they have to pay 200 rupees because that's what we decided. And our earnings will go to the charity of all the 8 of yours choice, which I will send an email. You can reply. And we'll do once in a month. Like maybe at the month end, I will ask one of you to verify the whole earnings, and you guys can take the money and donate it to whatever is your 8 people's choice after the transaction costs and everything, right? Transaction cost is, if you pay 200 to me, I won't get 200. I will only get 190 because the 5 rupees or 10 rupees the guy will charge, right?
Banking transactions kind, yeah.
Yes.
Or expense. Yes.
All right, ladies. So thanks so much for your time, and I hope you learned. And I will see you sometime soon because there is an extension of this session, which I will decide when to do it. Maybe next Saturday, next Sunday. I don't know, but I'll notify well in advance. And have a nice weekend and Saturday.
Sure. Thanks, Cora.
Thank you so much, Cora. Thank you making
Bye,
this
everyone.
Women's Day special.